So Nick Ogden, I'm really glad to speak to you about RTGS Global, which is a global clearance system that you're building with a number of colleagues, two of which happen to be people I know well here in Halifax, Nova Scotia. Gord Cooper and John Risley. I gather John Risley was involved in ClearBank, your earlier investment, and has backed you in RTGS Global. Describe to me, if you could, just for a second, what it will do in terms of a global clearance system to transform banking globally for business and for the financial system.
Okay. I've gone through the joy of actually building a clearing bank in the UK, which is quite an education. You know, it's the brave should do it; those that aren't brave shouldn't do it. And you have to learn.
Regulator.
Sorry.
But make sure you have a supportive regulator when you do it.
Yeah, but you need a supportive regulator, and you need a hell of a lot of coffee, because you have to learn about liquidity and leverage, and there's a whole raft of stuff that you have to learn about. And as you're going through this, right, you know, I'm a payments guy and transactional guy and all the rest of it. You start to see the way that the existing systems are being built. All right, so it's a real eye opener, and you see that the things that are really important to the regulators are the bits they actually don't really see for some bizarre reason. And so, as we're looking to develop ClearBank and move out from our UK base and develop it internationally, we'd look to do international payments. And there's a huge amount of risk in relation to international payments. There's a huge amount of friction in relation to that. So I thought there must be a better way to do that. All right. And so I came up with this position of sort of saying, look, before we do a payment, let's make sure the money's there. And that's a really stupid place to take in banking, because you assume the money's there. But of course it's not. And there's a thing called Herstat risk and settlement risk and a load of other things that go on. And so let's actually go back and let's make sure the money's there. You know, when you and I used to check into hotels or whatever, you know, they always welcome us, sometimes give you a drink, and then immediately ask for your credit card to make sure that they have liquidity coverage for your bill. Yeah, in payments, we don't do that. That follows the event.
Great analogy.
All right. So what we did was we said, okay, fine. What we're going to do is we're going to make sure that the banks have got the money. And so it's what we do in RTGS Global is very, very simple. And that is, so, you know, if a bank in Canada, all right, well, a customer's a bank in Canada, has got to pay a bill in the UK, they'll go to their bank in Canada and say, can you make a payment of £10,000 to this supplier in the UK? And so what we do is we say, yes, of course you can. But before we do that, let's make sure the bank in Canada has actually got, we use 1-to-1 for the exchange rate, 10,000 Canadian dollars. And of course they have, and we put a thing called a liquidity lock, which is a temporary hold on that 10,000 Canadian dollars. We do exactly the same on the UK bank. All right, have they got £10,000? Yes, they have. We put a liquidity lock on it. That takes us about 50
on the bank.
On the bank, because the interbank liquidity has got nothing to do with the customer. Yeah. The customer might have $1 million in his account. Yeah. All right, this is nothing to do with him. It's the relationship between the banks and the friction between those banks. I'll come to the friction in a second. All right, so we know within about 50 to 100 milliseconds, depending upon where you are in the world, which is really quite quick, all right, whether the banks have the money. All right, they set their FX rates, they set their charges. We're not interested in that. All we're interested in is the liquidity. All right, what we say we are, and this is a real mouthful, is we are an auditor of bilateral liquidity.
That's a very, very simple description and covers a very sophisticated issue, but it's a very simple description.
It's all we do. That's all we do. All right. And so at that point, both banks know they're both good for the money. All right. They don't have to do credit checks. They don't have to pre-fund. They don't have to use correspondent banking. They don't have to use Nostro-Vostro accounts. All of that is replaced. All right. So they go back to their customer in Canada and say, okay, fine, this is the deal. Do you want it? And he says yes. He approves the transaction using his online banking system. What that does is that message comes through to us, right? Based upon that instruction, and all the instructions we're receiving are from banks. We don't do anything without an instruction. What we do is we produce a thing called a patent pending liquidity block. It's nothing to do with blockchain. It's a block because it's a combination of messages. And what it does is flips both of the liquidity locks. So the ownership of the funds changes. in 50 milliseconds. So immediately the Canadian bank owes the UK bank, or has an asset on its balance sheet of 10,000 Canadian. And the UK bank has got £10,000 that the Canadian bank now owns that it can pay away.
And so
that's it.
As somebody who's waited for wire transfers to come through.
Really?
In running a small business, when payroll is coming on Thursday night at 2 a.m, or Wednesday night at 2 a.m, I should say, early Thursday morning, and you there's no insight, and all of a sudden it shows up. You don't know if it's going to show up yesterday, today, or tomorrow, or the next day. Tell me the time frame for this. What's the time from when it's initiated from the Canadian payer to the recipient in the UK receiving the funds?
About 10 seconds.
Yeah. A fair amount of certainty and speed.
Should apologise. That's 7 by 365 by 24. So that's full on 24/7 real time service. And the reason why I've said about 10 seconds is you have to settle it into faster payments in the UK, unless it goes to a bank that's connected. If it goes to a bank that's directly connected, you can be less than a second. We know we could do Canada into Australia in 10 seconds. Right, and
transforming business globally.
Do you know what the cost of that is? Do you know what the cost of all of this is? Last year we sat down, because we've been chatting to the IMF and the World Bank about this project, we again got huge regulatory support. UK Feds, your regulators as well, have been very accommodating, and we worked out that we thought that the cost of the existing infrastructure and the payment delays was about $2.7 trillion a year.
It doesn't surprise me. When you look at the amount of global trade and the value of that global trade and the amount of money that has to keep moving back and forth, it doesn't surprise me one bit.
Yeah.
So this is a massive productivity gain.
So a guy at the IMF said to me, "I think you've got the wrong number, Nick." And I said, "Look, it's very hard doing trillions on a smartphone calculator. Have you ever tried to do And he said, no. He said, no. He said, I think actually the number's higher. Don't worry. So he said, we can have a look at this. We'll come back to you with a number. All right. And he came back, and we had a meeting in DC last December, and they reckon it's nearer $15 trillion a year.
Of productivity lost.
Of cost and productivity and all the rest of it. Now, so if you turn around and say, okay, given we're coming out of COVID-19, or hopefully coming out of COVID-19, the whole world has had an economic battering, all right? If we could improve efficiency of cash flow by 20% a year over the next 5 years, or 10% over the next 10 years, all right, you're releasing trillions of additional cash flow into the marketplace for zero
cost. Yeah. And that's, when you look at economies trying to recover from COVID, we have got to focus on productivity.
Yeah.
So Gord Cooper, Chief Operating Officer, John Risley, one of the investors. It sounds like, what's that?
I was going to say, John, we met when we were setting up ClearBank. And as we were setting this one up, he said, I've got a guy who I think can help this. He used to work with Visa. And so Gord got involved with us. And I have to apologize to you. I have yet, despite numerous offers, have yet to make it to Halifax. And I will try as soon as we have these aeroplanes flying again, I guess.
Once it's safe, we can't risk you. We can't risk you. We want you to be here, but we can't risk any issues. So the reason it's being built around an idea because of the momentum you built in the UK, that clearly occurred. You really accelerated your momentum because regulators have embraced competition.
Yeah.
They've embraced innovation. And so what would be your advice to Canada? I personally, as somebody who spent a lifetime in startup businesses and innovative businesses, I want to see more of this happening in Canada because I think we're very capable of it. We came out of the financial crisis probably with the most trusted bank brands in the world.
Yeah.
I don't think we're levering that into the opportunity for financial technology growth in the world and the types of productivity gains that you're speaking about with RTGS Global.
Yeah.
So just what's your wish for Canada? I mean, because I think you see the opportunity for us as well.
Sure.
And what would your advice be to us?
I think that if you want, I mean, you've got a lot of clever people already there. So we can't, we don't, we'll create more, but that's not the issue. I think the issue is putting up a structure where that cleverness can be diverted into something which becomes meaningful. The way they did that in the UK was both the PRA and the FCA having this sandbox environments, so that, and have a capability for market competition. So I think that's what you need to do. You need to turn around and say, look, this isn't challenging. It's complementary to our economy. It's actually complementary to the banks. All right. So let's give our regulators a competition mandate. Let's embrace that. Let's try and do that quickly. It doesn't need to be complicated. And you'll make some mistakes, because everybody always does. And sometimes short-term mistakes are better than long-term delays. And see how that goes. But I can't see how that would fail.
Let's just, as we wrap up, you just spoke about delay. The cost of delaying is, I think, enormous from what you just described, for example, in one aspect, which is global clearing, having a global clearing system and the benefit it could bring to the global economy, versus the cost of the risk of being a little bit aggressive is a far lower cost, it would seem at this stage, because you can manage those risks by having parallel systems, by having certain controls. So I think that's a really important point you just made. But I want you to speak about the sandbox, because I do remember clearly in December or November of 2015, seeing the announcement of the SCA starting their sandbox system.
Yeah.
What would be your advice in Canada in setting up a sandbox that earns the trust of our really, really smart and courageous entrepreneurs and fintech experts, so that they can really open up the kimono and sort of feel like the regulators can be helping them to get better, but not punishing them because of what they learned? And I think that's a tension that's very much there. And so how did the FCA design things, and what advice would you give to us?
I think the other tension is the fact that all the regulators prefer to play in the sandbox and do the day job, because that's it's something we learn as kids, I guess. But anyway, I think that what you need to do is almost run it on a joint venture basis, a collaborative basis with industry. You've got some great universities over there. You've got some great professional groups involved in fintech. Bring them in, embrace them. You're not going to get consensus. You're not going to get complete agreement. You need to make sure that everybody understands that this is not a bypass round regulation. This is to ensure that regulation is fit for market, and it may well not be fit for market at the moment. And if you've got Canadian companies who are having to trade in America because they can't trade domestically, then I would suggest there's a fracture somewhere that already exists. Okay?
Oh, without question.
So I think that you've just got to be pragmatic about it. And most people who want to build legitimate businesses understand the need of regulation. Yes. Those that don't want to, don't.
Yeah.
And you've just got to have frank and straightforward conversations with the latter in that event. But most of the people involved in fintech really want to see something develop. They don't want to be at the wrong end of widows and orphans losing money on some scheme because it was ill-conceived and unregulated.
Absolutely. I mean, and any of my Republican friends in the United States who talk about the need to get rid of regulation, I ask them whether or not they'd like an NFL game or a NASCAR race without any regulation. I mean, Everybody wants regulation.
Yeah.
What we want is regulation that allows for competition to be really strong and productive. So, Nick, listen, this has been a tremendous opportunity to chat with you. I'm genuinely grateful for you taking the time to inform me of three important things, parts of your career, just in helping the UK response in fintechs, setting up ClearBank, and setting up RTGS Global. Thanks very much for taking the time. Really grateful, and look forward to chatting again.
My pleasure, and hopefully see you for a beer the other side of the pond at some stage sometime.
You bet, Nick.
Thanks very much.